What's up, guys? Welcome back to another episode of Robinhood Portfolio video. Right now, the portfolio is down $400, guys. It's really bad. It's getting super serious with this stock market. For the week, I'm down $600. For the past month, I am down $1,100, and for the past 3 months, I am down $270. So the markets have been very bearish. Is the sky falling? I don't know, but it is looking really bad right now, and we need to again evaluate our strategies. We need to evaluate what are we doing as far as buying and holding strategies, investing versus trading, guys. What kind of situations do you want to be in? Are you an investor? Are you thinking long term? Are you thinking about the valuations, the fundamental analysis, the risk with buying and holding a stock? Or are you a trader? You love this volatility. You love the short term. You love the price and the technical analysis of stocks going up and down just every day, and huge sell-offs and put options. Guys, we're going to talk about it. We're going to get into it all, guys. Investing versus trading. We're going to get back into the basics of my positions on my portfolio. I've been all over the place these last couple of videos. I know I've been into the FANG stocks. I've held like $11,000. I'm just all over the place. We need to just have a straightforward strategy when we enter this market, guys. We have to have a straightforward strategy. This is not a casino. This is not a game. You will lose money. So we need to have a level-headed approach to the market. And I was looking at some of my earlier videos. I was doing really good. Boeing up $125. Johnson & Johnson up almost $200. $200, guys. I was in a very friendly average cost. I think I was about $120. That was a buy and hold forever stock. You do not sell Johnson & Johnson, period. But let's get to the portfolio, guys. Again, I looked at the earlier videos. I said to myself, I want to be an investor. I'm not a trader. I don't like looking at my portfolio every day. I may peek at it every now and then, but I do believe in the Warren Buffetts of the world, and I do believe in buying and holding and collecting dividends. So with that being said, and without further ado, we are going to get into some of my holdings, my new holdings for the portfolio. AbbVie down really big, guys. AbbVie has been getting absolutely crushed, down 13% for the month, also down 13%, and for the past 3 months, down 11%. I think there was some news about the CEO making an exit out of the company or starting next year. I'm not really sure what's the news going on with that, but in combination with the market sell-off, I think a lot of investors are freaked out right now about AbbVie, and it has been really serious, guys. Average cost $80, down $5 right now. The dividend yield for AbbVie is still very attractive. I think they pay a 96 cents dividend, and I think I'm going to really collect off that with the 10 shares that I have. This is a really beaten down stock, a beaten down pharmaceutical stock that I really don't like trust these little pharmaceutical stocks, but AbbVie is a recognizable name on the market. They do sell a lot of popular drugs in pharmaceutical healthcare. I really do think that this is a pretty good valuation for the stock. Let's go talk about Dominion Energy. This is a utility stock, I believe. A really good utility stock that I like, in at the average cost of $74.26. I may have overpaid for this. I believe I've heard of Dominion Energy and having an exciting dividend before. For the year, they really got down to about $61. Brutally assaulted there when it got down to $61. That was a very good buying point, but very attractive valuation levels. I think still this is still a pretty good attractive valuation level compared to some of my favorite energy stocks. Utility stocks like NextEra Energy. We saw that NextEra Energy did very good today. NextEra Energy was up $4, which is very incredible. So when the market is falling and everybody's getting out, these utility stocks do very well. Dividend yield is very good. I think they pay an 84 cents dividend. This is a buy and hold, guys. This is a buy and hold stock. So we're getting back to the fundamentals of buying and holding and seeing and averaging down when the price gets very attractive to low levels. Enbridge is a energy stock. So we had a utility stock, and now we have an energy stock, a Canadian energy stock that has a very exciting yield. I think their yield pays about 4.74. I don't know how accurate that is, but Really exciting yield. Total return minus $49. Again, this is a buy and hold stock. That's why I have 50 shares of it. I didn't like Shell's valuation at this point in time. I just think that Shell is a little bit pricey right now, but Enbridge is kind of trading near 52-week lows. This could go lower, guys, but again, it's a calculated risk that I like, and this will pay a $29 dividend. That is very exciting. Very solid for this high dividend portfolio. So we're getting back to the basics. A high dividend portfolio. We're putting some more blue chips into the portfolio, like Home Depot, very stable company, a very exciting retail stock that sells all those appliances and tool sets. But we're in an average cost of $80, minus $32 for the day. Citing dividend yield, I think they pay $1 dividend. That's not too bad. 10 shares. Home Depot has been. I've been watching Home Depot for a while. They've been really been beaten down for this last few weeks. I think this is down almost 15%, 16%, which is just incredible. The whole market has been beaten to death, guys. It's very serious. Iron Mountain, we're in at 32. I think 32.15. Portfolio diversity of 11%. Iron Mountain is a very stable real estate investment trust. I really like their dividend. I think their dividend is like around maybe like 6 to 7%, but Iron Mountain pays about I want to say 59-cent dividend for 50 shares. That is a very solid, attractive a buy, especially around this time when it's near a 52-week low. Very exciting stock. It's a real estate investment trust that focuses on data management, records management, and sort of they've been doing a lot of like paper records management, and I was really iffy about that because I was like maybe a lot of computers are starting to store the data and in computer space. They're not holding it in like files and folders anymore, but they're starting to adapt. Iron Mountain, a very good stock. This is a very safe real estate investment trust that has a stable outlook. Dados has been spiking up. Total return $123. Average cost $165. I think I overpaid for McDonald's, but they had a really solid earnings report. I knew they would. And the dividend yield, they increased their dividend to about $1.16. So with 10 shares, again, really solid dividends coming my way as long as I hold. 3M has really been beaten up here. I think yesterday they had a really terrible, awful earnings report that they recently announced. The stock is down 13% for the month. The stock is down, again, 13%, $29. That is a really bad drop. Average cost 187, 10 shares. I've been ready to swoop up some 3M shares below that $200 mark. Even at 190, I thought they were still a little bit pricey. I won't buy anymore unless it goes like super down to like maybe about the 175 or something like that. But this is a really exciting dividend. I think they pay out about $1.32 for a $14 dividend. I think it's around $14 for the amount of shares that I have. Microsoft, they reported earnings today. They had a really good earnings report. I believe they did beat earnings. So don't have to say much about Microsoft, even though I'm down $22. I traded Apple out for Microsoft. I think that some people would kind of agree with that trade. Apple and Microsoft, one of the best tech companies on the market. Some people like Apple more. Some people might buy Apple. Apple is quite expensive right now. I think it is about $220 or somewhere around there, but Microsoft still fairly cheap, about $104. I know a lot of people said they weren't going to buy Microsoft when it's like above $100, but a really cheap stock. And then we have UPS, guys, $108. They did not. They had a good earnings report. I think they recently announced their earnings report, but just the market sell off in general and people just losing their minds and just market sentiment. It's a bearish wave right now. Everybody's selling off. This is the time to swoop up some shares. And the average cost $109, down $17. But again, the dividend yield is really good. It's really stable. I think it's stable for a company like UPS. I had FedEx here in the last couple of videos, but I just didn't like their dividend yield. It's really low. And if I'm gonna be doing a lot of buying and holding, guys, I want to be sitting on those nice dividend stocks. So that's gonna do it, guys. You guys see my portfolio in a nutshell. We're getting back to the basics. We're gonna be doing those buying and holding and collecting dividends. buying and holding, collecting the dividend stocks, those really sort of like high yield companies that I really like. I've been looking at a lot of companies as of late, and I've been looking at attractive valuations, and just that's what an investor does. I like to see myself as an investor. I need to stop looking at my portfolio, stop trying to get clever, stop trying to like trade and be short term and the volatility and this and that. Who cares, guys? If you're gonna be in this market, you need to know how to take punches. It's gonna happen. You're gonna lose money. Let's talk about AT&T. This is a stock that had a bad earnings report. I just wanted to quickly talk about them. They look really good at a average price. About $30. I think this might go lower to about $29. To tell you the truth, the earnings report was not good at all. I think they missed. So the actual EPS was 90. Expected was 94, and they have an increasing debt. It's really not a good time to be in AT&T. They just keep sinking down and down and down. But again, this could be a contrarian investment. This could you want to buy low obviously and sell it high, and this is a good maybe a good time to just swoop up some AT&T shares and just sit on it because they have a really good solid dividend. I think the dividend is around maybe about 6% right now. So AT&T, that's just another stock that you can buy, and I might just put into this portfolio and put all the sort of high dividend paying stocks into this portfolio. I'm gonna really try to get 20 of the highest paying dividend stocks that I can find on the market and put it into this portfolio, and just kick back. Stop worrying about you're down $1,000. So what? It's gonna happen. Markets go down. What goes up must come down. You must realize that when you are an investor, you're thinking long term. You evaluated the risk. There's a quote. There's a quote online about investing. Rome was not built in one day. It wasn't. So this is going to be a long-term project. This is going to be a long-term portfolio, and it should be a long-term portfolio. I was looking at all the earlier Robinhood portfolio videos, and I was doing a lot of buying and holding, blowing up $125, just insane. And I held that for months, guys. So that's the kind of stuff that I like to see. I'm not sitting here and I'm not trying to force anything. I just like to sit back, collect dividends, and if the market goes down, so what? Because I know it's going to go right back up at a certain point. Market goes down, market goes up. That's what it does. So that's going to do it, guys. I'm going to cut the video here. Just again, another look at my portfolio. I'm going back to the basics, and I'm losing money. The sky is falling. It sucks, but again, that's what happens. That's what happens in the market. So I'll see you next time, guys, and thanks for watching.